volatility 75, volatility 75, volatility 75. Now sorry, the strategy has about it's a 4 strategy indicator. The first one is on the 1 hour time frame, the second one is on the 5 minutes time frame, the third one is also on the 5 minute time frame, and then the fourth one is also on the 5 minutes time frame, which I'll be explaining everything as we move on. So now we'll start setting up the chart for the first for the 1 hour volatility 75 time frame. We'll go to our properties, colors, like white, red, bar up, bar down, red, bar down, red. Then the bull candle is green. Sorry, there's something. Okay, good. So we have all these up, right? Let's do some and delete all the symbols on the object on the chart. Okay, I think it's okay, so I don't waste any time. So the first strategy we'll be putting up is on the 1 hour time frame, and we'll just go to our insert, and then the first thing, go to our indicators, oscillators, so go to our trend, parabolic SAR. The step are 0.02, and then the maximum is 0, and then you OK it. Then we have something like this. You can change it to whatever color that might suit you. So for clear visibility, I just turn to green. Okay, now we've added the first indicator. Second one we're going to be adding is the moving averages. Moving average. The first moving average we'll be adding is the moving average 50, and the method will be exponential. We'll give it a yellow, apply to close, then we'll OK it. Then we'll go back, we'll add in the second moving average, period 20, exponential, close, and then we'll give it a call of aqua. So we have this. Then the next moving average we'll be adding to our chart is the moving average 12, exponential, close, and we'll give it the color green. Okay, so now we have on our chart now. Then the next part of the moving averages we're going to add is the MACD on the oscillators, MACD, and your MACD value for the fast moving is EME is 30. The MACD value is for the simple moving average is 2, and the slow exponential moving average is 50. Apply to close, green and red and everything. So we have something like this. So when we have something like this, we'll come down to indicators. We'll look for our moving averages under trend, moving averages. We just drag it to a MACD, because we're trying to underlay the moving average to the MACD. We're trying to apply the moving averages to the MACD. So the first moving average will be adding is the 12 moving average, and it's going to be exponential, and we're going to apply it to the first indicator, which is our MACD. So we can give it a color of green. We can OK it, so you can see this. Now the next thing we've set up, we'll finish setting up for our 1 hour time frame, and then we'll go for a 5-minute time frame, and then we'll do the same. We'll fix the properties, make our platform and our chart look a little bit better. Foreground red, bar up green. This is how I like to set my chart. You can set your chart to whatever color that you find suitable for you, but like I like to see the green candles going up, and I like to see the red candles coming down. So I have this on my 5-minute time frame on the second strategy, and then this one I'm going to add in the indicator with the moving average 500. Sorry, the moving average 200. The moving average 200 applied to exponential. The method is exponential applied to close, 0 shift. You can leave the color at green, but like I want to set it to blue. So I have this. Then the next one is the 50 moving average. The 50 moving average exponential applied to give it the color of black. The next one is the moving average, which is the last moving average under this part, which is 25, and then we'll give it a color red. Yeah, so when we have this now, we'll go to the third chart, fix the same thing. Well, instead of doing this over and over and over again, you can just save it as a template, whereby you can just bring in the template and then just move on with your settings and everything. But I'm just doing it for the sake of those people that are just coming in, that are just starting up, so that you can keep seeing what I'm doing and learn so much from it. Yeah, can do. So we have this. Take off the grid. So on this one, we're going to have the moving average 18. Moving average 18. Right. It's exponential. We're applying it to open. 0 shift. You can give it the color of red. Sorry. Set. The next moving average we're having is a 23 moving average, but this time around we're applying this to simple, apply to close, and the color is blue. Please just take note of the color symbols that we've been using all through. And then we'll be adding the triple exponential moving average. The triple exponential moving average. Where are you? Okay, here is it. The value of 14. It's close, and then red. Same thing, just okay. Okay. Over the triple exponential moving average. But first of all, before having that, let's add in the relative strength index. Just make it default. The style, you blend the color, the style color to the background color, because it's not like we really need it. We just want to have something like that where we can put in the underlying triple moving average with the other moving averages. So we can now drag this triple exponential moving average here to our RSI. Yeah, so we now have this. So then the next one we'll be having is the moving average 23. We'll look for a moving average. We'll drag the moving average to our RSI there. we'll have this. We're applying this moving average to the first indicator. Simple. You can change the simple to exponential, and we're leaving it at 12. Color, we can give it a color of green. Okay, so we have this color of green. Okay, color of green. So the last one is where all the closing will be happening, and that's we'll set the background to white, the foreground to red, the bar up green, bar down red. We can do same thing we did the last time. We're just repeating the same steps over and over again. We're in this stage. Then here, what we'll be adding, we'll just be adding one RSI, oscillators, RSI, and this RSI is 2. You can give it the color of whatever color actually that you can choose. So we'll give it the red color, and then the levels, we're going to edit the levels. Sorry, edit the levels. 90, 10. Okay, so now we have our complete setup from the 1 hour time frame to the 15 minutes to the 5 minutes time frame of the second confirmation to the next 5 minutes of this next confirmation, and then the next 5 minutes of the third confirmation. So we have this. Now basically what the strategy entails, like whenever you see your parabolic SAR appears above, and you can see your yellow moving average is clearly above your aqua, and your aqua moving average is clearly above your green. You can see some at this point. Let me zoom in. At this point in the market, all what is saying, like the market is going to be on the downtrend. The market is going to be on. Also look at your MACD. You can see your MACD values. The green has crosses this red symbol here. You can see at this point. So from this point in the market, you know, like okay, on the 1 hour time frame, the market is going to be bearish. So now, if the market is going to be bearish, you need some furthermore confirmation, because everything you're going to be doing on the lower time frame, which on the 5 minute time frame. You need some more confirmations, and this confirmation is why we have to go to our next 5 minutes indicator. Now let's get the date here when this occurred. You can see exactly on the 20th at 6 o'clock 2021. That's when exactly this sell trend occurred in the 1 hour time frame. So now we'll go to the 5 minute time frame and confirm and see what's the criteria for entering the sell trade on the 5 minute time frame at that date. So we'll move back and check the same date, 20th at 6 o'clock. We'll move back. Good. This is at 6 o'clock here. So now what happened is the sell criteria on the next 5 minute time frame on the volatility 75 is, you see, whenever this blue moving average is above this black moving average, and this black moving average below the red moving average, the market just sell. The market is going to try to tell, okay, the market is still on the downtrend. But then that's not enough confirmation for you to enter the sell. Do you understand me? So you can see at this point in the market there was nothing, then we just have to wait. So there was this confirmation of a sell here. I'm going to plug in, let me plug in my vertical line so you can see what I'm saying. Okay, good. This is where a sell occurred fully. On the 1 hour time frame, you can see this clearly. On the 1 hour time frame, the sell occurred. The sell signal started by let's say 4 o'clock. 4 o'clock. So let's just go back and look for 4 o'clock here. Where's our 4 o'clock? 4 o'clock. Okay, here. Good. Now this is a perfect sell. Now you can see on the 1 hour time frame it's a sell. On the 1 hour time frame it's a sell. On the next 75-minute time frame of the 5 minutes, this 75 minutes and 75 volatility index of the 5 minutes first entry, it's a confirmation of a sell. Then we'll go to the third one around that same time, 4 o'clock, and see what is our criteria for selling in this market. 20th by 4 o'clock. 20th 4 o'clock. Okay, this is here. These are 4 o'clock. These are 4 o'clock. So we'll bring in this. Drag it to our 4 o'clock. Okay, so now for our 4 o'clock market, what is the criteria for selling here? And this one with the, now you need to know that, okay, when this blue moving average, let me take out this, it's not supposed to be there. So when this blue moving average is above the red moving average, the market is a sell. And then to further affirm this strategy here, you have to look forward for this green moving average to be, to be below the red moving average for sell in places like this. You can see. So now these are our three entry rules. Do you understand me? So now let's assume, like, okay, the market's at this point and then we want to enter the market. Let's look at the criteria. What are the criteria for entering using the 3 different strategies? So now on the 1 hour time frame, we look at this. We can see a sell at 2021-10 this year, this month, some couple of days like back, that was yesterday, by 4 a.m. By 4 a.m. we have a sell. Now what we need to do now, we move our next to our next minute, which is our 5-minute time frame, and look at it. We have a sell here too. Now, but then before we can enter the sell, we have to wait. We have to confirm it from the third indicator that everything is balanced here. If everything is not balanced here, we have to wait for everything to be aligned perfectly. Now look at this. This is a perfect sell where everything was aligned. Let's move it. Good. That's by what 6 o'clock 29, and then let's move back and check by that time what was happening in the market. 6 o'clock 29. Okay, at this time it was a sell setup, also a sell setup. And then let's look at the 75-minute time frame. The market must have moved to 6. Good. It's around this point this time. So you can see from here it's also a sell in the market. So basically at this point you're selling in the market. So now when you're selling at this point, how do you go out of the trade? You will use the last indicator to go out of your trade. You use the last indicator, which is the RSI tool, to go out from your trade. Our entries are from 6/29. Now let's look at from 6/29, that date 629, right? 629 of 20th. 629 of 20th. Good. 629 of 20th. So now you enter your market at this point, 629, 20th, 629, 629, 20th. Now you enter your market at this point. Now whenever you're selling, look carefully. The market went down. You can see your RSI went down. It went down. The very moment your RSI begins to come back up, you exit the money. Your sell. Exit the sell. You exit the sell. Whenever your RSI comes down and it's going back up, you exit the sell. So now, as you can see, at that point, 29, the RSI is already hitting the 10 level. So you ignore the sell. You just ignore the sell, because at that point where the RSI was hitting the 10 level, was telling you like, okay, you're supposed to exit this market. You're not supposed to be entering a sell, because we're trying to sell at the a very we're just trying to, like, this scalping strategy that just helps you enter a perfect trade. Do you understand? So basically what you do is you just come out. You just ignore the market here. Ignore the market here. Why? Because RSI has indicated that, this is a point in the market where you usually have to go out from the market. All what you need to do, you have to wait for a further confirmation. Further confirmation. Now let's move further and see what happens. At what point was the market trying to sell here? Okay, well, very good sell here, because you can see at this point the red is above the green moving average. So we can go back here. I'm coming. Okay, we have this. So okay guys, sorry, I'm back. So we're looking at this from we're looking at it from what day. Let's take it back. Yeah, at this point. Okay, at this point, that's at 5 o'clock on the 20th. So let's move to 5 o'clock on the 20th. 5 o'clock on the 20th. So this way we have our 5 o'clock on the 20th, and then the next strategy we look for the 5 o'clock on the 20th also. 5 o'clock on the 20th. 5 o'clock on the 20th. 5 o'clock. Okay, this is for our 5 o'clock on the 20th. Or 5 o'clock on the 20th. So now you can see at this point the blue moving average is below the red moving average, and then from our indication here, it's a total opposite of the sell that we're having here. You can see, we know that from the higher time frame, from the 1 hour time frame, the market is on a downtrend. It's going to go on downtrend for a very long period of time. So all we're doing here is just on the 5, we're just trying to streamline our entry to the 5-minute time frame, since we already know what's going to happen on the higher time frame. Since the market is moving to be bearish on the higher time frame, so we already know, okay, if the market is going to be bearish on the higher time frame, all we need to do, we need to know what we're going to be doing on the lower time frame. to be observing whatever the market is doing on the higher time frame. We want to move with the market, we want to flow with the market, we don't want to fight with the market. Do you understand? So 5 here, the market was selling, but then our next strategy, next confirmation strategy at 5 here, it's not saying, it's not a sell, it's not a sell. So where was this a sell? Here, the sell happened around the sell setup took place around 626. So we'll move back and say, okay, around 626, what happened? Was it a sell? 626. Okay, yeah, around 626. You can see clearly from even our blue moving average, which is our 200 moving average, it's telling that okay, yeah, the market is up there. So on the 1 hour time frame, let's look for 626. Yeah, everything happened around this time, because this 1 hour time frame. So we have something here, 626. So it was in between this candle and this candle. It was in between this candle and this candle. So now we have our perfect sell entry, perfect sell, and perfect sell. Now this is a sell from this point. Now to what point are we going to go out from the market? We already know that, yeah, the market is going to be on a downtrend for a very long period of time, but we're scalping here. We're using the lower time frame to go in and out of the market. You understand me? So now to exit the market, we'll use the last indicator, which is the RSI. On that same date, 626, let's look for our entry. Oh, sorry, 626, that 20th, 626. Good. You can see here 6. Now, whenever you're selling in the market, whenever your 2 RSI touches this 10 level, this 10 level that we set up earlier, close your sell. And whenever you're buying in the market and your 2 moving average crosses above the 90 and it's coming down, you close your buy market. So you can see, but then at this point that the market says sell, this was all a perfect sell. On the RSI, it was telling like, no, you should be closing your market there. So at this point in the market, you're not going to enter the sell market. It's not valid, because if your entry strategies are telling you to enter the market to buy or sell, and then your closing strategy is telling you to close at that point in the market, you can see it's negating itself. So you wouldn't be doing anything at that point in market. At that point of the market, all what you need to do is just leave the market until there's a perfect entry where the market is trying to say, okay, yeah, you can enter a sell at this point. Do you understand me? So now let's look at the market again. Let's move further. Since the market is saying no, you can't sell here, you should be closing your sell. Then when is the market telling you to sell? Whenever the moving average, whenever the RSI goes back up. Sorry, let me add up the, I didn't add the rebalance level, I took it off. Let me add in the rebalance level. Indicator is 50 rebalance level. Okay, now you can see clearly this is our rebalance level, which is at 50. So whenever the market comes back and go back up to this level, you can enter your sell there. You can enter your sell as the market keeps going. When the market is here at the rebalance level, you enter your sell. As the market goes up, you re-enter your sell here. Then the very moment the market drops down and then the market is trying to go back up, you close all your sell. You close your sell. You can readjust this. Let's readjust the RSI 2 to 4. Okay, good. So now when we adjust the RSI from 2 to 4, this is giving us a very good entry. So now at that point, at that 626, we can still enter the market. Whenever the RSI touches your 10 level, you close your sell. Which is from this point to this point on the 5 minutes. Now let's go back and look for the date we have at 7:05. When is 7:05 here? Okay, you can see at this point, before the market turnover, it was already telling you 7:05. Where is it? At this point, it's telling you like, okay, yeah, close your market, close your sell. Now the point is like volatility is very volatility 75 is damn volatile. It's very volatile. So from here to here, it's more likely to give you over 40 pips on the 5-minute time frame. So now you can use this strategy. You can use the 1 hour time frame to predict how the market is going to look like in the higher time frame, and you can use the other 2 5-minute strategies for your perfect entry, and then the next 5 minutes, which is the RSI for edited, for your closing strategy. Thank you for watching.